homies, how we doing? Hope you all had a wicked day and a wicked start to the week. So I just wanted to hop on quickly. I'm going to make this a routine now moving forward. So I'll be doing one trade recap a week. Not exactly sure which day. Obviously, it depends on the day the trade presents, but I'm going to do my best to try and get you guys a recap each week. Just showing the process that I showed in the overall trade process video. If you haven't watched that and you're watching this, naughty, back to overall trade process. And if you're watching that, or you've watched that and you haven't watched the new refined stuff, naughty, back you go. So yeah, I just wanted to showcase, I get a lot of messages saying, how is your plan so simple? Do you really stick to that? Is that what you use? Blah, blah, blah. And, the answer is yeah. The reason I did everything, in the last video was to showcase how simple trading should be. It shouldn't be, a notion full of 45 pages. It shouldn't be, there's this, there's that, discretion, it should be very clear and concise. This is my plan. This is what I'm going to do. So I'm not going to make these massively long-winded. I'm just going to get straight to the point with them. I don't want to leave you guys here forever, watching me waffle. So just want to show you the thought process this morning. I had a very similar outlook I posted in Phantom Charts. Obviously, again, I know you take more value from a video, which is why I'm hopping on here. So yeah, let's get into it. So obviously I was looking at, the 4 hour as a whole. Obviously we've got this whole big sort of bearish leg. I was paying attention that we did have, after we broke these lows here, I just quickly before you might say, well, my low not here or anything. This low that broke here was the last low to go that obviously had candle body breaks. So as you look here, obviously at the point here we had wick, then we broke with a body here, so then that made that the low, and then obviously these just wick the lows again, so liquidity sweeps, and obviously we had that bullish push. That's why my low's not on this wick. Then obviously we broke the low here, and then we had a pullback, and again it's not a huge pullback. There is more than one candle. I think it's like 25-ish pips or so, 24 pips, so you can count this as some form of structure for sure. And obviously on Friday, we broke this. Now, again, not saying the 4 hour is fully bullish. It's more so a bullish pullback. Just quickly on the daily, these lows for me are going to get smashed. So we could see some higher prices because we didn't really mitigate anything amazing. We did mitigate a 15M for the sells. But looking at this, I'm thinking we could see slightly higher prices and then run these lows. There's quite a lot of stuff, below down here, which we might obviously see price run into. So just doing a charting up process. Again, people ask, how do you chart up and things like that? I'm just analyzing, right, where was the recent break? What happened? Well, I can see here that we had these sell to buy wicks that caused this break, and looking like there was a flip. Obviously, we'll go on a lower time frame and check it out. So straight away, I'm like, right, well, I've got a 4 hour level here. Now, in the overall leg, if we're looking at this from swing high, swing low, obviously it's very well priced. We're in the discount. If we're looking at it from here to here, it's not so well priced, right? It's quite high price. Now, again, premium and discount, I'm using more as a confluence. It's not part of my plan where I say it has to be in discount or premium to trade. I'm fully aware of the risks of that. Yeah, so anyway, I'll move on. I don't want to keep waffling. My bad. Right, so then I'm going straight to 15M. And I'm going, right, well, I can see that price came into this 15-minute zone from the left, which I believe was back from NFP. We've had a reaction, and this morning, I know a lot of you caught shorts, and fair play to you. Obviously we took this high out here, so took the high, took the low, so there's obviously chalk. Obviously we took it with this wick as well, if you want to class just a wick, which for chalks I do. And then obviously we saw a series of mitigations. We mitigated this, then this wick mitigated that and held. I was actually looking for this area for shorts, and also the extreme of the wick, because my overall intention was to play price back into this 4 hour and then see continuations. Obviously it didn't quite get there, and it came back up to this level here, which again is completely valid. It caused this break here. Obviously price came back into it, and there was a couple of nice shorts, but for me, I wasn't completely happy with those. I didn't want to get involved with them. Maybe a little bit slow this morning, but I was fine with that. They're completely valid, and those of you that caught it, happy days. But what I didn't then go and do is think, right, I've got a trade. Oh, I've missed a trade. Oh my God, I'm so bad. I just thought, no, I know where I want my level to hit, and I'm going to wait for that level to be hit. And, you know, I literally did that. So I set an alert on the 15M. So let me just get rid of that 4 hour. You can see you've got the 4 hour, and then inside that, hang on, got things all over the place. So I had this 15M, and again, I just did the usual. I went left, I checked what it hit. So if we get the cheeky ray line, not that one, that one, and we slap that there, we can see that we reacted to this inside bar, which was also a flip to the left, and we obviously hadn't had mitigation of it yet, right? Price just missed it there. So again, expecting some form of reaction off of that, price gave that reaction, tried to put in a new low and failed. So obviously we've had our flipperoonie or L flippos. So this level for me was you know, a fairly strong level. Now again, you know, if you're putting on premium and discount, you know, it's not the best priced, and you could say, oh, I don't want to take that trade. Now again, for me, this is why I stopped using this as a main confluence and a must. I just use it as a, right, if it's in the premium discount, of course it helps, but overall I'm not going to let it define my trade. If the level I'm trading off looks good and I'm happy with the criteria, then I'm going to hit it. Again, just to run through, I want higher time frame mitigation, liquidation, flip, chalk, granny smash, right? So all I'm doing in this moment now, the days of watching the chart and sitting there going, oh my God, I need to be in a trade, I need to trade, are gone. All I'm doing now is waiting for the alert to go off. So if we just get price down there. Another thing with this as well, and again, you know, this is something to test. It's just something I've noticed from, you know, a lot of sort of data gathering, is that, you know, when timing can be quite a big key, right? Now, again, I'm not, this isn't like gospel. Oh my God, if timing comes at 1 o'clock, I've got to take the trade. But what you can find a lot of the time is sometimes like New York will reverse London, and you know, it will, if it's been selling off and you come into a nice area, you may get a long. Now, so for me, anytime sort of at 1 o'clock, so 1300, it tends to be when you might get the right trade for New York. So again, I just had timing with this as well, which was really nice. Now I'm going to run through the ones that I took, but I'm also going to showcase it on the 1M as well. I did enter these 2 trades on the 15 seconds, but I will show the 1 minute entry as well, which was completely valid. I was just already in it. And, you know, the thing with the seconds is sometimes you've got to sit for a bit of drawdown and a bit of long-windedness, because it's essentially setting up for the 1 minute. So again, just bear that in mind. So we've come in higher time frame mitigation. We've taken out these equal lows and structural liquidity. So I'm like, cool, you know, 2 things are ticked. Now it's just a case of, can we wait and see what happens next? So at the time I was still on the 1M, and I saw this and I was like, right, why has that happened? You know, all look in balance. Woohoo. No, definitely not. Right. So I was like, right, okay, let's see what happens next. And then it played on, and it, you know, something took that level out, and I was like, right, okay, this is essentially the 1M supply that we want to be looking at. And obviously our chalk, again, you know, takes that low out. We want to see those highs get taken out. Again, anyone that asks what chalk is, you know, we're putting in a series of lower lows and lower highs, and then all of a sudden that fails, right? So like Brian speaks about, you know, it's when all of a sudden we're doing one thing and then we do something else. Essentially, you know, we've got these protected lower highs here, we're putting in new lows, and all of a sudden we break the low, we break the high, chalk, right? Pair that over flip, granny smashing, well away. Okay, so what I was looking at is I was like, right, you know, and again, if you don't have the seconds, don't make this video feel like, right, I've got to get the seconds because I wouldn't have seen that. You still can enter this trade, right? But I just want to show you my perspective of what my thought process was for those of you that have got the seconds, or for those of you that under, you know, kind of think, why am I in this trade? So I went on the 15 seconds and I saw this. And I was like, oh, okay, look, we've got this little inside bar, right? Which, of course, price already mitigated once. This inside bar is a valid supply because it broke this low, right? And remember, again, we need to see supply or demand zones for valid flips that actually break some kind of structure. If they're not breaking anything, then they're not valid. It's just not a supply or demand zone, so it's dead, right? So again, I get that question a lot. How do I validate the good supply or demand zones? Well, if they break structure, they're valid. Like that's it, right? So obviously we had this first tap, and obviously we went on put new lows in. But then again, I always talk about this as well. You can get multiple mitigations or drives into a mitigation, right? So we had a second mitigation that failed to take out these lows. And then obviously we took out the reaction. So the reaction failed. We've just witnessed a flip, right? So straight away, I'm thinking, okay, well, 15-second chop. There's our low. There's our high. So we've just taken out the 15-second supply. We've chopped. We've liquidated. We've mitigated. What's left? Smash the granny, right? So then it's a case of, well, what do you play? I just took this whole range here and was happy to play EQ. I wanted a 1.5 pip stop, which was there. So I may have given this a little bit of buffer. I had my stop just below the low. And I said to myself, right, that's my trade. Like, I'm getting in on that trade and I'm happy to take that trade. So just come back and let me move this over like that, right? So again, I'm not going to be like, oh, look at me, I'm going to cover this. No, I want to cover the low best I can. 1.5 pips for me, beautiful. If we go on the 1M now, we'll see here, we are just witnessing our failed reaction, right? This trades at the high is 7724, and this is 7724. So again, completely valid. It hasn't broken this without a reaction. We've had a reaction to this valid supply, which broke this low. So now we're seeing that pullback. Can we break and take out this reaction? So play it on. Right, so we've obviously had that break and we've obviously taken out that reaction. We just put this to 1 to 4 where I'd be break even. So now, obviously, if you're not in this trade, you can start to go, right, well, how can I get involved? Now, one thing I want to point out is for me right here, this isn't a supply zone. You know, it doesn't break anything at all. So I know you might be like, why wouldn't you take this long? And, you know, it's just because, again, one, there's always shit in wicks, right? Down here, look how big this wick is, massive, okay? And two, that hasn't truly reacted anything. This was the reaction, and this push caused the fail, right? So the extreme is in play for me here. Of course, maybe on the seconds, this breaks some form of structure. So, you know, you might play that. But this is where, again, you have to be prepared to play maybe a reaction to the decisional and a limit on the extreme, right? Obviously, I'm already in this trade on the 15 seconds. So if I go back to the 15 seconds, I'll show you how I got into the next trade. So obviously, after I'd seen that and I'd seen that the 1M had obviously committed, I still did have risk on the table. And I said to myself, right, well, I'll just, you know, I'll see what happens. So if we play this on for a minute, and again, this is what I mean about, you know, obviously when I was in seconds, got tagged in here, I'm sitting through all of this. Obviously on the 1M, you're not in yet. This is essentially the 1M wick. So sorry, I haven't marked that out for you. If I mark the wick, and then we go back to the seconds, you can see this sell to buy here is essentially that what's inside that wick, right? So in my head, I'm knowing there's a likelihood that this trade, it could well reach this level. So again, you know, BE for me doesn't exist. I do 1 to 4 and then I take my risk off, but I leave my stop open. Again, I've covered that numerous times. So all I'm seeing here at the moment is possible inducement. Obviously, I'm already in a trade, so I'm not too fussed. But if this level gets hit here and holds and we get another flip, I'd be happy to look at taking another long because I'm pretty confident in the level and the overall narrative that I'm playing. Now, of course, I would like my risk off before that happens. But I'm confident, you know, and at the end of the day, if I take 2 hits, I take 2 hits. It is what it is. You know, it's a game of probabilities. I've seen this playing out too many times, so I'm happy to accept that. So if we just play this on. Oh, I've gone way too fast. My bad. I'm just sitting there playing trades on. Right, hang on a minute. So what I wanted to show you was this. So obviously we got our mitigation here. And then I looked for this. So I saw price come into this supply, right? Which took out this low here, okay? And this low got wicked. It took it out, price came back into it, reacted to it, failed to take out this low, and then we broke, right? So I was like, cool, that looks good to me. Obviously, I'm still seeing a large amount of liquidity to target. So I'm thinking, you know what, I'll fancy this. Let's take this trade. So I actually took it off of this sell to buy here, and I went for a 1 pip stop. I won't go lower. I don't like going any lower. Obviously, if you just covered that low again, this is why I don't like putting my stop bang on a low or high because that can happen. So I went 1 pip, and I was like, you know what, 1 to 4 was, I'm pretty sure that, yeah, this trade I got my risk off before I got my risk off that trade. So yeah, then I put that trade on, obviously got risk off and got risk off this as well. So I was completely risk free. And then obviously, of course, now it's a case of, right, well, where do we get out? Where do we exit? Now, you know, to be honest with you, the way the trade was moving, I didn't love it. And I started to think maybe, you know, it might come lower. I had a refinement on this POI. I was looking at, I had this, obviously this inside bar and this wick, but I also had this wick underneath. I was thinking maybe price could visit that. So I was thinking we could get another sweep. And obviously, again, you know, it wasn't the best price. So of course I was aware it could have come lower. So what I did is I went on the 15 and I thought, right, where's likely to see reaction? So I saw this level and then I saw, did I play this level, I believe? So I had it like that. And I said to myself, right, you know what? Again, I'm at the moment, obviously I've mentioned I'm looking at going 1% risk on funded. Just something I've always wanted to do for myself. I used to risk 1% on previous strategies and they were pants. So with the understanding I've got now, there's no reason why I shouldn't be risking 1%. And also because, you know, I want to fully reap the rewards and I feel I'm at that point where I'm ready for that next level up. So I'm all about, again, you know, getting paid. That's why I trade, provide for me and the family. You shouldn't, of course, have a money attachment, but I'm not going to lie to anyone and say I trade just because I enjoy it. Of course, I enjoy it, but I want to get paid. So I'm also about, right, where's logically a good place to make money and to get out. So I saw this as our first level. And when price was here, I think I pulled it 6.6R, I think it was. I closed this trade in full because I said to myself, right, you know what, hasn't moved off, you know, beautifully. And of course, you know, I'm in 2 trades. So I'll pay myself for something. This one's now BE, obviously just taking off risk. So stop still, you know, down here. This one's closed in full, so 6.6%. I'm not moaning at that at all. And the next one I was thinking, right, where can we likely react next? And obviously it was this above level of supply here. So I was thinking, right, you know, as we approach these levels, we could of course see, you know, supply kick in, get involved again. But overall, you know, there's plenty to target. So if I play this on, obviously price, it came in. I didn't have a TP set. I wanted to see how it came in, how we reacted. Obviously, so I held it for a little bit. I wanted to see if we started to break these levels of demand or if they held. If it held, I was quite confident to hold for a little bit longer. And I think as it got up to here, I took 8R on this. So wherever 8R is, I got out basically. So must have been after this push up, I got out of the trade. I went and, you know, played with the kids. I think I built some Lego, which was wicked. Then trod on some and that hurt. But yeah, that was pretty much me. Like, you know, I took 6.6 and 8. You know, it was something like 14.6R. In 1% terms, it's 14.6%. My monthly goal on funding is normally 10-15%. So in a morning, if I hadn't traded August already, you know, bosh, I've hit my target. And that's my consistency. And that is what I'm all about now is, can I be consistent month in, month out? Can I do this month in, month out? And, you know, yeah, you know, if you follow those exact rules, you're patient and you're not mucking about in stupid areas. And you're not saying to yourself, oh, but I could have took this, oh, I could have took that. You'll be consistent. Like, you've got to have a plan and set of rules written down, only brief, but just a quick set of rules that you can, you know, check and go. If I didn't have them, I might have tried to take all kinds of continuations in this leg. This is pretty choppy price action. You can get burned if you don't know where you're getting out, you know, and like, you know, this trade did do more and I'm completely comfortable that I left something on the table, but you know what? We're always going to leave something on the table. So at the end of the day, as much as it's frustrating that, yeah, the price went up, it could have done more, or you could have done 15, 20 up. I don't care. Like, I made money. I provide food and shelter for my family for another month. Happy days. Like, for me, it's all about compounding the FTMOs into my personal and, you know, growing the personal to the capital, that 6 figures plus. That's the ideal goal. And that's what everyone should be looking at, is using prop funds to grow a PA. Rather than getting a prop fund account and trying to hit top of a leaderboard, or trying to, you know, make a Lambo in a day, why don't you just focus on being consistent, leaving your job, making more money than you've ever earned? You know, end of the day, 70K FTMO, 10% a month, it's more than most jobs probably pay. So why are we overlooking that first? Why are we not looking at getting consistent first? And why are we not looking at, you know, just enjoying the freedom, because overall I trade for freedom. I used to sit here every day and I used to try and get in every trade. It was nuts. And I honestly don't do it. Like, please just don't do it. Focus on higher probability stuff and smash it. You know, end of the day, this literally ticks my box. What did it do? It come into a 15-minute, right? It swept liquidity, higher time frame mitigation, flip, shock, smash granny. What does it do? Even if it's at the one, it's 8R, 8%. Not complaining. If you held it, 12%. If you were like a bit more like, no, you know what? I think that these highs might go. I'm going to hold it above those highs. Cool, mate. You know, you've made wonga. If you didn't take the scale in, it doesn't matter. Do you know what I mean? Like, you don't have to be in every move. But what's really important is not to just identify every chalk and go, oh, let's take this, let's take that. Like here, for instance, you know, price comes into this range, high up the leg, what happens? We flip, right? This range is validated, it broke these lows. Price comes in, reacts, fails. Yeah, of course. You could take a long off of this, 1.5 pips. But where are you going to get out? You're going to hold this to the moon? No, likelihood at minimum, really. This is where I would personally 1 to 5, or I'd target that high at most, or this supply zone, purely because it could well reverse and we're not very well priced. I'd be out. Like, I'm not bothered. Whatever happens, if it blows up, cool. Because again, it's about that consistency. Of course, you've got to have a higher strike rate if you're going to take 5 Rs, right? But you know, when PA is clean and I'm really loving the movement and we get an explosion, I'll hold these trades, of course, because overall I do see that high going. But I'm also aware there's a hell of a lot underneath me that could still get mitigated before we see higher prices. But I'm seeing how corrective this moved down, right? This took like 2 days, whereas, I mean, obviously that's weekend in total, but you can see this PA compared to this PA, it's showing at the moment bullish intentions. M15 is bullish. Obviously, you can say it's against 4 hour, although we did break some structure for sure. So I'm happy to look for this level, to look for longs. I've taken 14% off the market. I'm done for the month. Like that's me. That's how I'm rolling. And I think everybody should be looking at rolling the same way, because ultimately it's about consistency and freedom. And you know, you never get your time back, man. So on that note, I'm going to stop waffling because you aren't going to get your time back. I hope it was insightful. Obviously, if anything doesn't make sense, please ask, but please make sure you just rewatch things. It's the same stuff I talk about every day. Yeah, and I'll catch up with you guys soon for the one next week. Peace and love.